Now for today's War on Your Dollar segment, which is being brought to you by First Hour Trading. You can download their special report, How to Make Enough Money in the First 59 Minutes of Trading, absolutely free, by visiting firsthourtradingtv.com. Now, while everyone talks of the September surprise in politics, this time the September surprise comes from the world of economics, with Fed Chairman Ben Bernanke acknowledging that the weakness of the U.S. recovery and that the recession being over that he talked about may not be evident. So while Ben has been holding the company line of saying that the recession is over, does it now seem like he's starting to cave in?
Well, very definitely, and that's, of course, what shocked people. Earlier on, people were boosted by the 0.4% rise in retail sales, of course, forgetting that back to school is always a peak time during the year in sales, and this time we had tax incentives targeted specifically at back to school, and, of course, massive discounts by sellers. And therefore, there was a blip in the otherwise downward trend of retail sales.
Now, one of the things that Ben Bernanke did say in his recent testimony was that Bernanke pointed out to the need to flood the market with liquidity, which he said he would do via purchasing new toxic debt, as well as pumping more money into the system via the old Gutenberg printing press. And as we've seen that, we've now seen the dollar under attack. He's basically committed us to inflation. In fact, he said that we didn't have enough inflation. Now we're seeing gold hit new highs of $1,300 an ounce. Silver's hitting 30-year all-time or 30-year new highs of over $22 an ounce. And we're basically seeing a flood towards the precious metals markets and away from the U.S. dollar.
Well, this is a perfect situation for precious metals to continue to run. If you sat there and tried to dream up of a reason why precious metals should go higher, you couldn't think of anything better that's actually going on. And it's a beautiful thing because you look at what Bernanke's doing is cheap money. We're printing, massive money printing, buying back more bonds, quantitative easing too. And what's happening is he came out this past week and said it's going to happen. We're going to do it basically. The economy's faltering, and gold makes a new high through $1,300 an ounce. I've been calling for $1,300 an ounce in September. I've been calling for $1,500 by year's end. I believe we'll eventually hit $2,500 or $3,000 an ounce with ease, I think, with the current conditions going in. And the thing about it is go into China. Just look at what's going on in China, and this is driving the gold market higher. Think about this. China is no longer buying American debt. They're actually selling their American debt. They're buying Korean bonds. They opened up the gold trade. They're buying more gold, and they depegged the yuan. What's that say to you? They're getting out of American paper, and it's bullish for gold. And what it's doing is look at the American dollar. It all ties into the American dollar. The dollar broke 80, so technically on the chart, the dollar is in major trouble right now.
We talk about with Bernanke and what it's doing with the liquidity markets and everything else. We thought Madoff was a Ponzi scheme. I mean, the U.S. government is the biggest Ponzi scheme in the world. I had a statement last week. Somebody asked me a question about what do I want to see out of Washington as far as the economy was concerned. And I said, Washington needs to become bilingual, and the second language has to be the truth.
Yes.
We are getting stories left and right. I mean, people don't realize it, but if you take the military budgets of China, Israel, France, I think Germany, and maybe India in there, and you added them up, our debt service is larger than the entire total of all of those military budgets. By the year 2015, we're going to be paying for the entire military budget of China.
But when you look at the enthusiasm that right now people have about gold, people are so enthusiastic about gold, and I've seen it twice right now in my professional career. And the first time I saw it was back in the late 90s and early 2000s when people thought that, man, look at that NASDAQ at 5,000, the NASDAQ's going straight to 10,000. And then again seeing that in in 2007, oh, look at the Dow's going straight to 20,000. There's nothing's going to hold this Dow back. We're going straight to the races. And what happened both those times? The NASDAQ pulled off to 1,000. The Dow pulled off from 14,000 to 6,500. Sure, the Dow's come back to now in the high 10,000s, so where we are right now. But there was a major correction, or there was a major pullback before any type of coming back. And you think that that's going to be the case with gold?
No, I don't. Well, I agree with you only part of the way. I mean, I think when the stagflation hit, when the deflation hits, as I said, it's my only disagreement, and it's only a minor one, really, with Anthony, is that I think this gold price, which I think is only half of its actual discounted value high, could have a big correction as those investors who've invested in gold purely as a hedge against inflation and not as insurance against a meltdown, those people will start selling. And there could be some big sellers. And I could see the gold price dropping to the 1,000 mark or even just below as a correction.